Hello everyone, we will start the past paper discussion for CL3 Advanced Management Accounting. I'm Akila Gunaratna. So if you look at your syllabus, it has 5 different areas. First one being cost management, where we would focus on costing systems like throughput accounting, activity based costing, then quality costing, environmental management accounting, concepts like that. And then we have planning and controlling. So planning means we actually focus on short term planning like budgeting, and for controlling we are checking whether we are in line with our short term plan, the standards that we have set. So for controlling we have an area called variance analysis as the one of the main areas. In addition to that, there are other small areas as well. Then decision making is more into short term and long term decision making areas. In the short term decision making, we would look at decision making techniques using relevant costing basis, and then we will look at some other short term decisions like make or buy decisions, then whether to accept or reject an order, decisions like that. And in long term decision making, we would look at techniques such as net present value, IRR, NPV, IRR, then payback, then ARR, accounting rate of return, and then we will go into advanced appraisal techniques like when you have different lives, equivalent annual cost, equivalent annual value, and then concepts like profitability investments. Those are some of the main areas under decision making. And then we have risk and uncertainty area, where we combine probability areas into our decisions, where we look at approaches like expected value, and later we combine with decision trees. And finally we have working capital management, where we focus on management of receivables, payables, inventory and cash. So those are the main areas in our syllabus. So let's look at the past papers. We will go one by one. 1.1, we have 10 MCQ questions, and the first one being, which of the following is not a benefit of using common data and practices across the whole organization by ERP system? So if I brief you the theory area for this, so organization started with materials requirement planning system, where you initially plan only for materials. So you wanted to optimize the material cost. So you wanted to optimize the inventory. That was material requirement planning systems. Later that was evolved to manufacturing resource planning systems, where you plan for all the resources including material, labor, machine hours, things like that. Finally, these were evolved to much more sophisticated system called enterprise resource planning systems. So in ERP systems, we have just one system combining or integrating all the areas in the organization. It would integrate sales, production, finance, warehouse, all the areas, supply chain. So in ERP systems, the benefit is you have just one centralized database, and it would connect with everywhere in the organization. I mean, when you purchase from a supplier, that purchasing model is there, and when you do the real purchase, your accounts are updated, and when you get the sales order, it's taken through the system and the order is captured, and when you invoice, and that will get captured in your accounts as well. So your warehouse is linked, and warehouse inventory levels will also get updated. So that is the ERP system. So in ERP system, since you have everything in centralized database, you don't have any duplication of data, which is an advantage. Otherwise, if you have separate systems, like for accounting you have one system, for supply chain you have another system. So if you have different systems, it actually creates duplication of data. So it won't happen in an ERP system. And these ERP systems have been developed using some established processes, well established processes. Therefore, when you implement the system, sometimes organizations, processes, existing current processes should be changed, and you will learn better processes, because ERP systems have been developed by analyzing the best or most optimum processes. Therefore, it improves your efficiency and it helps you to plan properly. Right? So, if you look at this particular question, you have 4 options. They are asking which is not a benefit. If you look at the question in general, we feel like all are benefits. It eliminates data redundancies and improves data integrity. As I told you, the first one is a benefit because you have one central database capturing all data. Therefore, there is no redundancy. And the second one being it improves reporting and planning because the whole organizations, all the functions are linked together to produce a report. You can just press a button and you can generate a report. If you need to know the profit as of today, you can quickly generate your P&L. If you want to generate a post completion audit, you can do that. If you want to generate a sales report, you can do it in a minute's time. You can do it, right? So reporting and planning, or if you want to get your data to a dashboard and present, that also can be done quickly. So therefore, the reporting and planning becomes easier with ERP systems. Then it reduces investment required in assets. That's also a benefit of ERP systems. But to be specific for this question is asking which is not a benefit of using common data and practices across the whole organization. Therefore, your focus has to be more towards data side. So C is a benefit, but it's less related to data. That's why option C is slightly different. Option D, it makes it easy to establish improved data security and quality. If you look at data, because you have common data and practices, so security wise you can make it more secure because you have a secure central server. If you use a cloud based server, the security is more. Therefore, part D, the option D is also correct. If you look at option A, B, D, those 3 are straightly linked to benefits of using common data and practices across the whole organization in an ERP system. Option C is slightly different, though it's a benefit of ERP system. It's less linked to data and practices. Therefore, we will select C as the answer. All are correct. So, less related one out of these 4 would be C. That's the reason we are selecting C as not a benefit of using common data and practices across the whole organization. So, we emphasize the term common data and practices here. So, let's go to second MCQ. So, you've been given 4 statements, and when you look at the question, it's about activity based costing. If we look at the history of ABC, so why we want ABC? If you look at traditional systems like absorption costing had its own inherent limitations. So one issue was absorption costing results in giving a higher cost per unit for certain products. Let's say usually when you look at the costing for a product, a high volume product should get costed low because of the volume, cost per unit should be low. A low volume product, cost per unit should be high. So ABC wants to solve the problem. Problem means absorption costing would give you just one cost per unit. That is the problem for all the units. So absorption costing uses one overhead absorption rate across the organization. Therefore, it would overcost high volume products and undercost low volume products. So low volume product actually should be having a higher cost because the volume is low. A high volume product actually has to have a low cost per unit, but absorption costing is not sophisticated enough to capture that. So that's one limitation of absorption cost. Similarly, absorption costing had many limitations, and it was more suitable for mass production, and if your production processes are quite simpler, and if the resource consumption is quite similar between different departments, absorption costing could handle it. But when these production processes became complex with the concepts such as just in time and all, when need more flexibility in the production process, and when you want to make the items more like when you want to make customer driven items, like for each and every customer, you want to make it very specific to the customer, like bespoke products, then what happens is absorption costing becomes less suitable. And in modern organizations, you have a lot of service elements as well. Therefore, overheads, the proportion of overhead the proportion of overhead as a percentage of your total cost is higher in modern environment. In traditional environment, direct material, direct labor cost that was a higher proportion out of the total production cost. But in the modern environment, because you have service elements and all, the overheads will be significant. And this overhead cost accounting systems, absorption costing, is developed to handle the overhead. When the overhead was insignificant, it was okay to use just one flat rate. But when overhead becomes a significant percentage of the total cost, absorption costing is not enough for us to, it's not sophisticated for us to cost the product. Therefore, you want a much more refined costing method like activity-based costing. Therefore, this ABC system was developed to overcome certain limitations in traditional overhead cost accounting systems. So, if you look at these four options, increase in competition and necessity to assess the exact relevant cost of products. If you look at activity-based costing, it doesn't give you just one flat rate. For each and every activity, you have different cost pools and you have different cost drivers, and you define different cost per driver. It's like having different overhead absorption rates. That's what activity-based costing does. Therefore, your costing becomes more accurate. If you look at number one is about that. Accuracy is more. Increase in competition and the necessity to assess the exact relevant cost of the products. So, you need to know the exact costing. You need to improve the accuracy of the costing of the product to make your decisions more accurate. Therefore, activity-based costing facilitates that. Whereas, absorption costing is less accurate. Therefore, number one is correct. That's one reason why we want ABC. Number two, direct labor cost is now only a minor component of the total cost of the production, which is true because now you use a lot of machinery, right? So, direct labor, because you use a lot of automation in your processes. If you look at certain processes like packaging, most of the companies you can see cobots doing packaging. Like you don't get humans. Therefore, most of the things that humans have been doing are now done by machines. Therefore, labor cost has become a very small proportion of the total cost of a product. Therefore, you need a much more refined method to handle these overheads. Therefore, that's another reason why you want a better costing system like activity-based costing. As number two is also correct. So, number three, increase in amount and importance of production overhead costs in the modern production systems. That's a point I stressed upon when I started this discussion about ABC. Now, the production overhead is significant compared to the total cost. I mean, if you look at earlier, the overhead was not that significant. You had more direct cost, but now you have more indirect cost. Indirect cost means overhead. Now, indirect cost, that is a higher proportion of the total cost. Therefore, that's another reason why you need a more refined or much more sophisticated costing method to handle this so-called overhead or indirect cost. Therefore, number three is also correct. Let's look at number four. Activity-based costing system overcomes limitation inherent in traditional costing systems. Traditional costing systems, we're talking about absorption costing, we use just one flat rate to relate the overhead to the end unit. Whereas ABC breaks the overhead into pieces called different activities, cost pools. For each you will have cost drivers and you have different rates. Therefore, accuracy is more. You overcome the limitation of inaccurate product costing of traditional costing system through activity-based costing. Therefore, activity-based costing is much more accurate. Therefore, all are correct. All are correct. Therefore, the answer is all of 1, 2, 3 and 4. So that's a little bit about ABC. And question number 1.3, this is about profitability, customer profitability analysis. So you can do customer profitability, product profitability, sales or delivery channel profitability. Different profitability analysis can be done, especially when you use a sophisticated costing system like activity-based costing. If you look at, if you read this question, a company markets an intermediate raw material to a number of institutional customers. The following is a summary. Facility description, discounts offered, delivery vehicles, delivery distance, credit period. Your customer 1, 2, 3, 4. If you look at discount offered 10, 12, 15, 9%, delivery vehicle, small van, big lorry van. So you know the cost can be different. The distances 100, 200, 120, 40, different distances. So cost can be different. Credit period, if you look at 30, 30, 30, 30. So credit period is the same. Therefore, if you need to do an evaluation on customer profitability, credit period offered becomes irrelevant here. The reason is the same for all four. It's the same for all four customers. Therefore, ignoring that, you can do your profitability analysis using other variables because it's the same for all four customers. Therefore, you can ignore it. Therefore, the question is which of the above facility will provide relevant grounds for the company to perform a customer profitability analysis. Since if you have something common, something same for all four customers, you don't need to take it into consideration because it's the same. Therefore, you can look at 1, 2 and 3 because those are different from customer to customer. Therefore, 1, 2 and 3 would be the answers. Answer A is the choice. So let's go to 1.4. Consider following functions. Okay, this is about which of the above functions of an environmental management system established by a hydropower generation company. If you look at this, is about environmental management systems, that is to reduce or minimize the impact on the environment. So when you read it, first one, rescuing animals during construction and conducting ongoing wildlife biodiversity support activities. So if you look at that, so when you construct in a hydropower generation company, you will be having channel paths, right? Because you have to get the water from the river, and those should flow to the turbines, and turbines should rotate and generate electricity. That's what happens. So when you construct those channel paths, right? Channel paths. So when these animals move here and there, so they can fall and they can die, right? So therefore, and during constructions, when you construct the powerhouse and all, right? So you do a lot of construction work and you use a lot of machinery. You may have to cut, sometimes you may have to cut trees even sometimes, right? Which is not that environmental friendly, right? So when you do all that, animals, you can create harm for animal life. Therefore, rescuing animals, that becomes part of their environmental management system. So first is correct. So number 2, ensuring regulatory compliance are met when paying employee compensation and benefits. That's based on the employment law. It's not related to environmental management system. I mean, you may have the system, environmental management system or not, you have to meet these compliances. You have to comply with your laws and regulations when you pay. Therefore, number 2 is irrelevant for an environmental management system. Though you have the system or not, you have to abide by your rules and regulations. Therefore, number 2 becomes irrelevant. Then when you go to number 3, establishing wastewater disposal and noise control plans for all hydropower projects. Sometimes when these turbines rotate, it creates some noise, and sometimes certain water, if you use to clean your machines and all, when you dispose them, you have to ensure that it's not toxic, it doesn't do any damage to the environment. Therefore, wastewater disposal and noise control plans are required for a hydropower company. Therefore, number 3 is also correct because it relates to the environment. So number 2 is the only control that doesn't relate to the environmental management system. Therefore, 1 and 3 only, that should be the answer. So 1 and 3, that is answer C. That makes C your answer. Then, if you go to 1.5, a company is currently operating at 75% of the capacity considering accepting a special order. Accepting or rejecting a special order, this is based on relevant costing. So, if I brief you a little bit on relevant costing principles. What do you mean by relevant cost and revenues? Relevant cost and revenues are costs and revenues that are affected by a specific decision. What do you mean by affected? If you make that decision, if that relates to an increase in cost or increase in revenue, reduction in cost or reduction in revenue, those are relevant. Therefore, there has to be a specific decision for you to define which costs are relevant or which costs are irrelevant. So, if you look at, there are certain costs like sunk costs which have already incurred, though you make the decision or not, if you have already incurred something, your decision can't change those costs. Therefore, those become irrelevant, sunk costs. So, if you have any notional costs like non-cash item like depreciation, any head office cost apportionment, the total cost base will not go up or down because of that particular decision. Therefore, those costs are generally irrelevant. So, usually your relevant cost would be your cash flows, incremental costs, reduction in costs, increase in revenue, reduction in revenues. Other than that, opportunity cost will be there. So, if you look at this 1, 2, 3, this is about a special order. Increase in depreciation, ratio 20% of the increase in capacity utilization. You have utilized more capacity, therefore depreciation has gone up. We need to know that depreciation is what? You have incurred a full investment and you are depreciating it over number of years. So, depreciation becomes the notional cost because the real cash flow has happened some times back. Therefore, depreciation becomes the notional cost, is irrelevant for a decision. So, number 1 is not relevant. The question is cost relevant for the decision, accepting this order. Second one, increase in notional rent for the additional premises required for the special order. Increase in notional rent. So, that's a notional, they use the term called notional rent, means they should be apportioning the rent between different products, different departments. So, what happens is, because you need additional premises, the rent for the total premise, it doesn't go up, the total rent doesn't go up, but your apportionment goes up. Therefore, since the total rent for the premise, it doesn't go up, therefore, number 2 becomes irrelevant, and remember the term notional is there. So, therefore, 1 and 2 both are irrelevant. So, if you look at number 3, 0.5% special commission payable for securing the special order. Because you secure the special order, you pay 0.5% special commission. Because you secure that order, an incremental cost is being paid. We know incremental costs, future cash flows are relevant for the decision. So, that makes number 3 a relevant cost. And number 4, additional payment for the service of 2 supervisors needed for special order, additional cost, incremental cost, it results in incremental cash outflows. Number 4 becomes relevant. Therefore, out of these 4 costs, only 2 are relevant. What are those 2? 3 and 4. So, 3 and 4 only, that makes A your answer. So, let's go to 1.6. So, this is about some investments from long-term decision-making area. How should the company invest 60 million in order to achieve the objective of maximizing wealth? We have 60 million. All the projects are independent, divisible. For divisible projects, if the projects are divisible and you have only 60 million, I mean, we can't invest in all the projects. If you look at all the NPVs are positive, all the projects are viable, but we don't have enough money. Different investment 40 million, 10 million, 50, 30, so the summation is more than 60. So, this is a capital rationing situation. So, when you have capital rationing situation and the projects are divisible, we use the concept called profitability index to rank the products and allocate the capital among these projects. If there's a capital rationing situation, the projects are indivisible, then we use what? We use combinations of projects and we look at the combined NPV and decide on the best combination or the most optimum combination. Since the projects are divisible, that means you can take part of the project even. Part of the project even, half of the project, 30% of the project, 40% of the project also can be taken. Since you can do that, you can use profitability index. So therefore, we'll have to calculate profitability index. So let me write that here. So P1, P2, P3, P4. So if you look at profitability index, let me call it PI. So how you calculate that? Your NPV minus the investment divided by investment. So you can use this whole formula and all that if you are asked to do this in a like written question where you have to write it and calculate and show that to the exam. Since this is an MCQ, you don't need the workings, you don't need to show workings. Therefore, I would calculate this in a slightly different way. I'll just take NPV over investment and calculate this quickly. This is quicker. But this is not how it's defined, but it results in the same answer. That's the reason. Therefore, I will take P1, P2, P3, P4. And let's calculate 8 over 40, 3 over 10, 3 over 10, 8.5 over 50, 6.6 over 30. So now you can rank the products. First place. So based on that you can allocate your capital. Let's allocate your 60 million first to P2 where you need 10 million. The total has to be 60. Number 2, P4, you need 30 million. Still you can do now 40. The balance should be allocated for number 3. What is number 3? P1 where you need 40. So I don't have 40, I have only 20 more. Therefore I'll put 20 for P1. 20 for P1. And I don't have enough money for this. Even from P1 requires 40, you can put only 20. So you basically you take half of the project, 50% of the project. Therefore, you need to select the answer that says P1 20, P2 10, P3 0 and P4 30. So what is that option that says P1 10, P2 10, P3 0 and P4 30. That is answer C. That is answer C. So P1 20, P2 10, P3 nil, P4 30. So you go with answer C. So that question tests the advanced investment appraisal, capital rationing decision with divisible projects. So with indivisible projects, we use combined NPV approach. Let's go to 1.7. Following activities are related to process of investment appraisal and subsequent reviews. Which of the above activities take place during the post-completion audit of an investment? PCA, post-completion audit means what? Once you do a project, once you establish a project, let's say I'm going to start a new factory. That's a project. So we do an investment appraisal, we do feasibilities and all that, we estimate future revenues, cost and all that, right? So let's say now we implement the project, first year, second year, gone. Now you can do a PCA once you establish the project, once you're done with the investment, you can do the post-completion audit. You can see which cash flows we have predicted in the initial appraisal, and now you can see the revenues, costs, what are the actual cash flows, and you can compare and see whether we were optimistic or we have overestimated or we have underestimated, right? So you can get an understanding on that. Why you do that is not to go back and see who did this forecast and it's wrong and to take actions against those people, not to apportion blame. So we don't do any post-completion audit to apportion blame or to find fault. Then it would demotivate the managers. Why we do a PCA? When you do a post-completion audit, naturally certain mistakes in your investment appraisal would get highlighted. Certain assumptions that were taken, it will reveal that those have been wrong. But this is not to take any action against them. This is to take this learning and apply this learning for future projects or future investment appraisals. That's why we do a post-completion audit. And while doing that, if you identify any issues in the project, like we're not getting the established or anticipated revenues or the cost base are now high, you can reconsider whether to continue with the project or not. So if you look at the answers given here, quite straightforward. If you look at number 1, comparing actual results of the investment with the budgeted results, that's something we do in the PCA. Number 2, identifying problems in relation to the investment and appropriate solutions. So corrective action could be taken for ongoing future investments. That's also correct. That's why we do that. We can't correct anything in the existing project. We can correct only the future projects. Number 3, performing capital rationing process. Not really. Capital rationing happens before you implement the project. Therefore, number 3 is out. 1 and 2 are correct. Let's look at number 4. Abandoning loss-making investment. As I told you, if you realize that you don't get the anticipated revenue, you don't realize the anticipated revenues, and you don't get the cost base that you are expecting, your costs are now higher. If you have a problem like that, you can reconsider whether to continue this project or not. That's called abandonment decision. Therefore, abandoning loss-making investments also can be done in this phase. Therefore, 1, 2 and 4, which is option number C. That's the correct answer. So let's go to 1.8. It's about the pricing decision, profit maximization, right? Profit maximization, and you are given a graph. It has a couple of lines, demand line, marginal cost, marginal revenue, and the question is maximum monthly profit. To get the profit, you need to know the profit maximization point, the number of units that we need to produce and sell to optimize or to maximize your profits. You have to know that. How do you know that? From theory, we know that's MR equals MC, where marginal revenue should be equal to marginal cost. But how should we get it? So let's learn it from this question. So to do all marginal revenue, marginal cost, your first step is to establish the relationship between price and quantity. To establish the relationship between price and quantity. So to establish relationship between price and quantity, so let's write step number 1. Price and quantity relationship. So you need at least 2 points, but since the point starts with 8,000, we know if you look at price equals, let's say, A plus BQ. So we know A's value because it starts with 8,000. Intercept. So A is the intercept. So therefore, this formula should be P equals 8,000 plus BQ. You substitute any other point than the point which is 8,000 on your demand curve. The other point that you can find other than 0 and 8,000, the other point is 200 and 4,000. When Q's value is 200, your price becomes 4,000. So I will substitute that. So from that you should be able to find B. That is minus 20. So that equation becomes P equals 8000 minus 20 Q. So if price and quantity relationship is this, what is marginal revenue? That is step number 2. MR becomes A plus 2BQ. MR becomes A plus 2BQ. So let me write MR, marginal revenue equation, 8000 2B minus 40Q. That is MR, marginal revenue. 8000, so 2B. So you have to multiply this by 2. Basically you take this minus 20 multiplied by 2. And step number 3 is identifying the quantity. MR equal MC, that is 8000 minus 40Q equals marginal cost. That's just one line, horizontal line, that is 4000. That is 4000. That makes 40Q minus 40Q equals minus 4000. Q is 100 units. Q is 100 units. So Q's value we got as 100 here. And now the question is maximum monthly profit. Maximum monthly profit. To get that, you can find price and substitute here. So what is the price when the quantity is 100? 8000 minus 20Q. Substitute this value. It becomes 6000. Now let's find the profit, the normal profit equation. That's last step, or step number 4 I can call it. Profit equals, so your contribution per unit into number of units minus your fixed cost. What is contribution? We know selling price is 6000 minus the variable cost, or the marginal cost is 4000. Marginal cost is 4000 from the graph. Units we got as 100 minus fixed cost they have given in the information given, it should be given to you. It says 30,000. So this is 200,000 minus 30, 170,000. That is the answer. 170,000. So this is your marginal cost, or the variable cost, 4,000 here. So 170,000 is option number A. That is your answer. So option number A is your answer. So you have step 1, 2, 3, 4 steps, but you can solve the equations quickly because those are given in a very given in a way that these numbers can be simplified quickly. It doesn't result in decimals. Therefore, you can simplify them quickly if you are used to this calculation. So that is 1.8, profit maximization, pricing decision. 1.9 is about big data. If you ask me what big data is, so big data and normal data, how you differentiate normal data from big data is, big data has certain characteristics: high volume, velocity, then variety. So you have 3 V's. In addition to that, you have veracity as the 4th V, and you can extend that to 12 V's, like it goes on. So big data, the volume wise, very high volumes. Variety, very high variety, like you have pictures, texts, likes in social medias, voice clips, everything. Then the velocity, the rate at which you generate big data is very, very high. Therefore, a normal computer, you can't use a normal computer to process big data. You need parallel computers running together to process big data. At the same time, since you capture data from different sources like social media and different social media, and then from databases from different areas, so you can come up with different relationships between products, between items, like between attributes. Like in supermarkets, they have actually found different very interesting observations. Like in one particular supermarket, they have found that people who buy beer on Thursdays, they buy nappies as well. Sometimes they have related this to weather. In a hot weather, which items you would buy? In a like cold weather, which items you would buy? Likewise. So likewise, there have been like very interesting results from big data. You can combine different variables, and it helps you to target your customer, identify the real requirements, and to segment the market and target the correct customer. It helps you to decide what we should include in a product, what your customer likes to be seen in the product, and it helps you to decide your volumes. Therefore, big data can help even the cost structures. You can use big data to establish your cost structures as well. So big data can bring you a lot of benefits. So if you look at the options given, 3 options given, it will help to decide on potential batch size, therefore help to produce more accurate financial estimate that is correct. It helps you to identify target groups, of course, yes. It will provide input to decide the recipe of the perfume, because it helps you to identify what your customers, consumers actually want. Therefore, it helps you to decide on the recipes as well. So 1, 2 and 3 all are correct. So all of 1, 2 and 3, option number D. Option number D. Then we have the last MCQ. When you look at it, you know from which area we got tested here. It's a decision tree. It's a decision tree. A company is considering investing 100,000 shares of a company A or company B for a 1-year period. The entire investment will be made in share A or share B. There's a decision tree, and they have given share A decision box means where you have to make a decision. A circle means an outcome. For share A, 2 outcomes given with the respective probability. Share B similarly given. They are asking which of the following investment decision recommended. Invest in A or B and the profit. Let's try to draw it quickly and do the question. So you can quickly calculate expected value when you look at the circles. Decision trees, if you look at, should be read from right to left. Decision trees should be read from right to left. So you have the decision box. So you invest in A or you invest in B, followed by 2 circles. If you look at, probabilities are 0.7 and 0.3, 0.3 and 0.7, 120,000, 90,000, 130 and 70. So you can calculate expected value here. Let's say EV1, another expected value there. These are actually year-end value. It doesn't include the initial investment. So you make 100,000 investment in either A or B, the same investment. So EV1, so when you read from right to left, the moment you see a circle, you calculate the expected value. So EV1, let's calculate 120 into 0.7, 90 into 0.3, you will get some value here. Then for EV2, you will get 130 into 0.3 plus 70 into 0.7, another value here. So let's do the calculation and see. 111. So if you look at the net outcome out of these two, the highest value is expected value 1. So definitely A seems to be better. So we will select that. And the net value to be put here is you have to deduct this 111 minus 100, the net value is 11,000. 11,000. So 11,000 is your net capital gain here. So invest in share A and earn a capital gain of 11,000. That's your answer. So correct answer is B. So that finishes the discussion of the MCQs.